The bulls and bears remain in control as long as they do not lose more than 55% of the control they once had. On the red bar, as long as the bears do not lose more than 55% of the control they have, the odds are prices will continue lower on the next bar. If the bears lose more than 55% of the control they had, the odds are high that the reversal will continue on the next bar. The bears stay in control as long as they maintain most of the red. On the green bar, as long as the bulls do not lose more than 55% of the control they have, the odds are prices will continue higher on the next bar. If the bulls lose more than 55% of the control they had, the odds are high that the reversal will continue on the next bar. The bulls stay in control as long as they maintain most of the green. When determining the potency of a reversal, ask yourself, how does the current price affect the traders who committed to the prior bar? On pattern A, there has been no reversal in price. Every trader who sold short these bars is holding a winning position. The price movement is confirming their expectation. There is nothing potent that has happened to the short sellers which will affect their expectations and suggest a reversal in price. Pattern B has a minor reversal bar with a small tail on the bottom of the bar. This green bar is penetrating about 30% into the prior red bar, which means there are some traders who sold short in the prior red bar that are experiencing losses. The tail on the bottom of the green bar shows us that this bar, prior to its completion, was a red bar. The tail shows us that there were traders who sold short at the low of the tail, and they are now experiencing a losing position. This bar not only affects some of the traders who sold short in the prior red bar, it also has losing traders that sold short at the low of the tail. For these reasons, pattern B is more potent than pattern A, but the penetration into the prior red bar is only about 30%, which means the bears still have control. The green bar on pattern C penetrated 80 or 90% into the prior red bar. This reversal is potent because it is causing losses for the majority of traders who committed to a short position in the prior red bar. The reversal at C is more potent than the reversal at B because there are more traders who sold short from the prior red bar that are experiencing losses. The greater number of traders that are experiencing losses, the more fuel there is to continue the reversal. Pattern D formed a green bar that is engulfing the prior red bar and penetrated about 30% into the next red bar. This is the most potent reversal of these examples because it is causing more losses for a greater number of traders than any of the prior three reversals. When determining the potency of a reversal, ask yourself, how does the current price affect the traders who committed to the prior bar? On pattern A, there has been no reversal in price. Every trader who entered a long position in these bars is holding a winning position. This price movement is confirming their expectation. There is nothing potent that has happened to the buyers which will affect their expectations and suggest a reversal in price. Pattern B has a minor reversal bar with a small tail on top of the bar. This red bar is penetrating about 30% into the prior green bar, which means there are some traders who entered a long position in the prior green bar that are experiencing losses. The tail on the top of the red bar shows us that at one time prior to this bar's completion, it was a green bar. The tail shows us there were traders who entered a long position at the high of the tail, and they're now experiencing a losing position. This bar not only affects some of the traders who entered a long position in the prior green bar, it also has losing traders that entered a long position at the high of the tail. For these reasons, the reversal at pattern B is more potent than the reversal at pattern A, but the red bar only penetrates about 30% into the prior green bar, so the bulls still have control. The red bar on pattern C is penetrating 80 or 90% into the prior green bar. This is a potent reversal because it is affecting the majority of traders who committed to a long position in the prior green bar. The reversal at pattern C is more potent than the reversal at pattern B because there are more traders who entered a long position from the prior green bar that are experiencing losses. The greater number of traders that are experiencing losses, the more fuel there is to continue the reversal. Pattern D formed a red bar that is engulfing the prior green bar and penetrating about 30% into the next green bar. This is the most potent reversal of these examples because it is affecting the thoughts and expectations of more traders than any of the prior three reversals. These are examples of the bars we will use to build our method. In the following pages, we will review the meaning of each of these bars. A narrow range bar is a bar that is smaller in range from high to low than the average size bar on the chart. A narrow range bar displays calmness. Emotion is controlled and not extreme. Let's look at a few examples. As we move through this example, notice the bars that are smaller in range from high to low than the average size bar on the chart. There are more narrow range bars on this chart than we are pointing out. These bars are very common. These bars show us there has been a stall in momentum, or traders' emotion has become calm. The area at H is a period of narrow range bars. They are all smaller than the average size bar on the chart. This shows us it is a period of calm emotion. Neither the buyers nor sellers are committing their money with any type of authority. A narrow body bar has a body that is narrow in relation to the high and low of the bar. The tail on the bottom and top of the bar should be approximately the same size. A narrow body bar shows confusion, erratic behavior, or lack of commitment. Let's go over a few examples. Bars that have a large tail on both the top and bottom of the bar are narrow-bodied bars. These bars are showing us that there is a lack of commitment from the buyers and sellers. Most of the time these bars should be left alone, but at times they can be an indication of a shift in control. A bullish bar extreme is a bar that closes at its high. The size of the bar does not matter. A bearish bar extreme is a bar that closes at its low. The size of the bar does not matter. Let's look at some examples of bullish and bearish bar extremes. A bar that closes at its high is indicated by no tail on the top of a green bar. A bar that closes at its low is indicated by no tail on the bottom of a red bar. It is common for large moves to begin with a bar extreme. Bar extremes may offer us an entry point for a position if they form within an infinity pattern. A bottoming tail is a bar that has a tail 2 times or greater the size of the body, and the tail is on bottom of the body. A topping tail is a bar that has a tail 2 times or greater the size of the body, and the tail is on top of the body. Let's look at some examples of topping tail and bottoming tail bars. Bars that have a tail greater than 2 times the size of the body are either a topping tail or bottoming tail. If the tail is on top of the body, it is a topping tail. If the tail is on bottom of the body, it is a bottoming tail. Bottoming tails and topping tails show us there are traders who have trapped expectations within the bar. A bottoming tail was created by sellers, and prior to that bar's completion, it was a red bar. The traders who were selling short and created the red bar have expectations to make a profit from lower prices. When the bar closes a bottoming tail, it traps the short sellers in a losing position. The shock in traders' thoughts and expectations are what cause bottoming tail and topping tail bars to be potent. The potency of these bars may offer us an entry point for a position if they occur within an infinity pattern.